This conference will now be recorded.
To become a financial analyst, this is more than enough, more than sufficient. So, accounting softwares, like there are n number of accounting softwares now. So, in the market, running softwares are like SAP in India for the local vendors Tally, like that Wi-Fi's, Zolo, billing softwares and all. We have so many things. This financial modeling is one of the thing that where it can make you an analyst about the finance. Here you need to dig more. We have
Sir,
taught you all
sir, I'm
the
not able to hear, sir. Your voice is breaking, sir.
one second. Now am I
Sir,
audible properly? See, when you want to become an analyst,
sir, your voice is
uh,
breaking, sir. I can't hear.
still it is breaking.
Yes, sir. Now it's clear, sir.
Okay. So now, what you need to do in the sense, once you want to become an analyst, in the sense, you need to learn how the business runs. So, what is the exact many mathematical equations also you are going to apply it, and statistical functions that you are going to apply it when it comes to this financial modeling. So, Excel is one of the platform where it will help you to do this mathematical calculation in easy manner, so you can just drag drop, so and it will show you the exact values, the accurate values, if I'm using the formulas. That format I'll be using with the help of this financial model. So additional courses, in the sense, it's not like that you need to integrate another some more additional courses. You wanted to integrate the financial model into the mode. It's like, in the sense, you need to improvise yourself into the financial model. So you Google it, try to take a different types of case studies, or else see how we did the drug model, like that itself. Try to do with the different types of models, try to find it out IRR. So you will understand how the exact format it has been given, how financial things are happening, how I can run with my business. So all the things that you need to understand. So additional courses, in the sense, in a market there are a number of softwares today which is running. So when it comes to the accounting related softwares in India, Tally is running good for the local vendors. For when it comes to the large scale businesses and all, SAP is good. So like that, there are different types of softwares for accounting. Analysis, it is financial model, Excel. That's it. Not more than that.
Okay, sir. Thank you, sir.
So in the last class, we have done this drug model.
So our exams will be on Tuesday only, sir.
Yes, 100%.
Okay, sir. And we should submit our Excel sheet, sir, which we have given as homework.
Yeah.
How do we submit it, sir?
Then in the group only you submit it.
Okay, so is it like during the exam time or before that, sir?
Before that, Tuesday exam, no, try to submit everything on Monday.
Monday, sir.
Mhm.
Okay, sir. Thank you, sir.
So here, drug model, selling the strips are like 150 per day, and the price is 25. 100 strips per day, then that is 60 rupees per strip. 5 percentage the year growth, 25 So here same 25 and 60. So to find out equals into open bracket 1 plus 5%. So you'll get answer equals into 1 plus 5%. Same manner, bracket it is 150 per strips and 100 strips. Same with the 5%. So 150, 100. So in the drug year, multiply the drug year price into quantity into it is per day 365. Same manner, drug B into drug B into 365. So inputs here you need to find out this plus this. So if you are getting a slash, it's nothing but the size of the column is less. So increase the size, it immediately changes. Now to operate a franchisee, it needs to have 750 square feet space for retail shop with a lease rent of 100 per square feet per month. Rental contract will be for 5 years. Deposited is 10 lakh at the start. A one-time renovation of the premises is worth of 20 lakh will be incurred at the start. Required personal cost will be 60,000 per month. So the first we need to find it out the rent amount. So they are telling rental expenses 100 per square feet. So the square feet is 750. So here this is square feet. Per square feet is 100. This is the square feet. Total is 750 square feet. So if I do this 100 into 750 or 750 into 100, so 75,000. So 75,000 is a rent expenses. So here I need to do what? They are telling rent expenses for year. So it's for year. So if it is been in the year, within a year, how many months that we will be representing is 12 months. That is 75,000 into 12 months. That is 90,000. This will be the same throughout the years for all the 5 years. Next, so the next is renovation. Here they were asked for salary next. Per month salary I need to put. So here in occur to start required personal cost with 80,000 per month wages. Inflation in an economic in the 7%. So when there it comes to the wages, it's nothing but like a salary. So you need they are also telling inflation in the economic of 7%. So there will be a 7% increasing of that particular 80,000. Okay, so the salary is 80,000. The percentage is 7%. So here what you need to do is like again they are telling for 1 year. It should be multiplied of 80,000 into 12%. Sorry, 12. Huh?
80,000 into 7%, sir.
7% we will do, that is a year growth, infection growth from the next year. But in the first year they are telling 80,000 for total 1 year. No, it is not, it is 12 months. 80,000 into 12 months. My salary expenses will be 96, 9,60,000. Okay. So now I told you already how to calculate the year growth. So how do you calculate the year growth of
Sir, 1 plus
7%?
5%.
9,60,000.
1%.
The previous year amount into the bracket of 1 plus
1 plus
7%.
5%.
7,
Yes, sir.
7.
Okay, sir.
Salary, no, it is 7%. So same manner you should cut. Yes. Cash flow case to answer I will send you. I'll send you the answers.
Okay, sir.
Sir, balance,
Ah, ah,
balance sheet 3 also, sir.
balance sheet 3 also I will send. Okay. So now next they are telling us operating expenditures. So the other operating expenditures has been increasing 25% on the annual sales. Excuse me. So they're telling other operating expenditure expense are expected to be 25% of the contribution. So when you have wanted to generate that for they told it for annual sales. 25% of the annual sales. When it is come to the annual sales year, select this amount annual sales into 25%. Enter. So every annual sales should have 25% increase. Okay.
Sales no, sir. First,
Huh?
one-
Huh?
so this
Sir, on
whole
annual sales,
thing, the
Huh?
whole is one question only, sir.
Huh?
Whatever else you can what sir, whole Word document which you are sent for the model, sir, drug model, it is one case only, sir.
Hello. Yeah, I'm sorry. Tell me once again.
sir, always we should take annual sales into 25%. So that operating
Correct.
expenses.
Yes, yes. They have told the same. No, in the question, they have told like other operational expenses are expected to be 25% of the contribution. It is on annual. So they have here they have only told the contribution will be 25%. So when you come to the year 5, if you keep the cursor on the comment box, they are telling it is on annual sales, percentage of annual sales. So the 25 percentage of annual sales. So
Okay,
my
sir.
annual sales should have an operating expenditures of 25% every year.
Okay, sir. Sir, if we drag that 9 lakhs, sir, rent
Hmm.
expenses, I'm not getting.
Hmm.
It is like doubling, sir. It is not getting same.
What you have done 75,000 into 12%, 12 you have done, or you have selected the 75,000 into 12.
75,000 sell into 12, sir.
Then it will change the reference. No, it will change the reference to 90,000. 90,000 next is what amount it is changing. I have typed. Still, if you
Okay,
are selecting the cell only, what you need to make this, you need to make an absolute. That is F4.
oh,
Then drag.
okay, sir. Thank you, sir.
So then reference will not change.
Salaries also we have taken 75,000 into 12 now, sir.
Correct. But here what happens when you are dragging? They are telling every year 7% it is increasing. So the year growth it has. So
Okay.
the previous amount into 1 plus 7%.
Always growth will be like 1 plus the percentage what it in the case it is.
Ha, yes.
Okay, sir.
So that
Rent
percent should,
expenses for every year it will be same,
correct. No, 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 no. Amount will not same. Oh, sorry. Rent, yeah. Rent will be same.
but they don't have any percentage.
They have not told that. So if there is a
If they have
percentage
told,
is increasing, correct. Then 1 plus the particular percentage.
okay, sir.
Uh,
Sir, whatever question you have sent in the model, sir, drug model,
hmm,
in the word,
hmm.
the whole question is one question, sir.
Yeah, yeah. The whole word file, whatever you see, is a question itself.
It is one single question, sir.
Uh-huh.
It is one single question, sir.
Correct. It is one single question. Complete. So to solve your case study, the everything is question mark. Okay. So next is for generating the period of tax rate in the economic that is 35%. So loss cannot be carried forward in the initial investment, that is deposit plus renovation. So can be funded by 60% bank loan with a 12% interest rate. The remaining should be funded using equity. So here, when you see this, we need to find out the interest expenses. Before interest expenses, I should have the debt. So the debt amount, whatever the amount will the percentage will be there. So that particular amount only you should do the interest rate. So here, if you want to find out the PAT, it should be total annual minus sum of your operating expenditures, means all the things expenses. So here it is getting like some 8 lakh 9,062. But we should do the interest expenses. Once I done the interest expenses, that will also will take the count here. So that amount will be added and it minus the particular amount there. So then I'll get a different amount. Till then we will do next. So the next they are telling is
What all should we add, sir?
uh-huh,
Sir,
uh, tell me.
so what all should we add, sir, again?
Uh, Total revenue minus sum of all the expenses.
Sir, interest we have not taken, no, sir, but they have mentioned the rate.
Correct. The interest you will be doing on the debt. Debt we do. We need to calculate the debt here still.
Okay, okay.
Okay. So, before doing this, to continue further, we will finish it up this part. So, deposit, renovation, total investment. They have told here rental contract of 5 years. Deposit will be 10 lakh at the start. So 10 lakh will be the deposit amount. So then renovation.
20 lakhs, sir.
Huh. So renovation is 20 lakh. Total investment. So you know that should be added deposit plus renovation. That will be 30 lakh. So that means in the sense has a deposit and renovation thing that that is to be repaired at the end of 5 years in a lump sum of amount. Investment opportunity with ABC code existed to provide the return of 20%. Deposit plus renovation can be funded by the 60% of bank loan at the rate of 12% rate. So here they itself has told you deposit plus renovation is my loan now. So to find out the debts, I'll be finding they itself has told the percentage. They have not given you the what the month or everything. So what I do equals that is my total investment into the percentage which they have told me is 60 percentage. So yeah, on crore 80 lakh it is been taken. So for this you find out the interest expenses. So interest expenses they told 12%. That is nothing but debt into 12%. So that is 2,16,000. So the amount should change 5,93,063. Now we do the tax. So tax is being calculated on PAT into 35%. That is 2,07,571. PAT is you should minus it. That is PBT minus tax. So that is 3,85,490. Uh, 490. So for this tax, whatever that you are going to take means when it comes to the 35%, the tax which has been calculated, it will be for the same amount. Means for the debts, if I wanted to find out interest expense will be means the same amount, the same debt amount. So what you can do is like if to not change the references, so you make this one as absolute. Then Okay. So next to find out equity. So again, the remaining should be funded using equity. 12% with the 40%. So where they have told for the deposit and renovation total only, for that also we will find it out the equity. So 60% as they told, the total amount of investment, 60% is a debt, the loan, and the 40% is a equity. So that should be the total investment into 40%. Okay. So now you need to take the initial investment. So the debtor repaid the 5 years of lump sum amount other than the other investments opportunity of ABC. So here the initial amount is nothing but the total investment. As it is been flow calculation, it should be minused. So as you are paying the debt and the equity will be given. So here you need to take minus D25. It should be in minus. So debt raised. So what is a debt raised? So when it comes to the raised or repaid, so the repaid amount is this amount, debt amount. So equals select the debt. This is the amount. So they have not represented to show you deposit refund or part in the first year. So total cash flow is the sum of initial to the part. So the amount is calculated.
Sir,
So
can you
next
please
part,
repeat it, sir?
which one?
From initial investment, sir.
So they have told what is their initial amount. So initial amount is nothing but the total investment. So as it is a cash flow calculation here, so when it is flowing up, the investment has been not kept, it has been expensed. So as it is debt, you need to repay it. Everything will become zero at the end. So that is the cash flow out. So you need to give the investment minus. Okay. Then what is debt repaid? So as itself they have told debt amount, the 60% of that amount is this much that you need to be selected. So you need to be repaid that much. So no deposit refund or something. Total cash flow will be sum of all the cash flow calculations. So we'll take sum of all this. Okay. So now whenever it comes to the in the beginning when it comes to debt repaid, at the end it should be minus. So every month you will be paying. No, here what you need to do, you select this D7 only, but let it be in the minus. So because you are paying every year, so in the first year it is raised or repaid it, then it's continued for the 5 years. With the zeroth year, which continues from 1 year to 5 years, it has been minus. It should be represented. Then what is a deposit refunded? So deposit amount is here. You select the deposit amount here. Okay. So it is deposit fund and sorry this debt paid refund.
So where is that rate, sir?
Here, this debt amount, no, 60% for the investment. Anyhow, it means if you are repaying, at the end it will be zero, so it is minus. So total you have paid your debt. So at the end I am giving minus. Okay. So in the cash flow, they are telling to take the PAT, other operating expenditures. See if they have told you here, other operating expenditures are expected to be 25% of the contribution. So every year makes the 25% of the operating expenditure is being contributed. So the 25%. So that 25% of the expenditures is being contributed from this annual sales. They have told you for the annual sales. So you should select annual sales into 25%. Then it is a year growth, so it should be, no, sorry, you just selected the annual amount into 25% for all the 5 years. So next is PAT. No, as I have PAT here, I'll just take the same amount, same PAT in the cash flow, then drag it. Then total cash flow. So as usual, you just drag the formula. Okay. So this much you do. The last will be IRR. So by seeing the IRR only, you can understand whether you
Can
can
you
go
please repeat?
what
Sir, can you please
what your voice is breaking.
repeat it, sir?
Which one I need to
The
repeat?
last step,
This one.
total cash flow. Yes, sir.
Total
PAT
cash
and total
flow.
cash flow.
It is sum of initial to the pattern. So just drag. That's it. From here you drag. It is taking the sum of this total. Same thing it will take. So here I have no the initial part of things I have not given. At the end I have given the minus part. So automatically it takes the sum of all together and it gives you the total cash flow. So at the end my cash flow will be 2,19,887 rupees every year. This is the cash flow for me.
Sir, can you please explain about debt prepaid and debt for refund again, sir? Deposit refund.
Okay. So total cash flow, to initial investment. No. So initial investment, the total amount I need to put. So as they have itself has told, total investment is like renovation and the deposit. The amount is not staying with you here. It has been already expensed. So it is a minus. It is a cash flow out. So once the cash flow out, it is minus only. So I took minus. Okay. Next is debt raised. In the zeroth year, they are telling me what is the debt raised. So of the total investment, 60% is my debt raised. In the beginning, I have. At the end, the debt has been cleared. So for the 5 year, how much I'm clear, I'm not taking. I'm directly showing you the debt repaid is amount is minus. It is been. Now deposit refunded when at the end of the year. So after the 5 years of lease, what they will do, they will refund your deposit amount. So my deposit amount, what I had here, I'll be added here in the fifth year. So I don't want to add in any of the year because it is being refunded at the end of the year. So when my lease get over. So once the lease get over, the amount has been refunded. So finally, here you do the sum of all the initial to PAT. In the zero year, I don't have anything. So as the investment and the deposit raised is more, I got the negative value. So but when it comes to the from the first year on the PAT, it is going to calculate it. So whatever you do, the PAT is itself a total cash flow for you. So yeah, just continue. At the end of the fifth year, whatever I have minus means I have cleared my debts, then I have my deposit refunded. So that PAT will be added. The total revenue it has been there here. Then you need to do the sum of the things. Once the sum of the initial to the PAT if you do, you will get the cash flow is how much? 2,19,887. Understood?
Sir,
Hmm.
why in cash flow they have not shown interest, sir?
Here,
Directly.
huh, interest they didn't show. Directly they are telling what is our minus amount at the end of the debt.
Okay.
So after 5 years, the franchisee will be handed over to the Apollo and deposit amount will be refunded. Ignore the depreciation they told, so we ignored it. So evaluation the business opportunity with the project of life 5 years. The debt is been repaid at the end. They have told here itself. See, the debt is to be repaid at the end of the 5 years in the lump sum other than the investment opportunities. So they are returning the amount at the end of the fifth year in the lump sum amount. So
Oh,
every
so
year they
only
are
we
not paying. Huh. So
so
when it is
last
been
year, this year we're showing.
we are showing that deposit debt refunded.
Okay. So salaries once again we tell the salary.
So the year they have told. Huh. So at required personal cost are 80,000 per month wages. Inflation in the economic is 7%. So as they have told, so the 80,000 is the wages that which we are giving per month. That is the salary where it is economically has a growth 7% every year. So 80,000 is a salary, 7% is a year-to-year growth. Here, what you need to do is like you just wanted to multiply that into 12 because here we are finding on the year based, so annually. So whenever you are finding annually or a year, it is for 12 months. Total 12 months you need to take. So that is 80,000 into 12 months. As they told, there will be a growth of the next year 7% the salary. So whenever there is a growth, the equation you take with the previous amount to multiply into 1 plus 7%. So you will get the value. So the same manner you need to continue till the end. Yeah, 5 years.
Okay, sir. Got it, sir. Thank you, sir. So like first initial amount will be on yearly basis, whatever they are given. So growth is
Huh.
from second year we have to take 1 plus
Yes, yes.
the
Correct, correct.
percentage.
Yes.
Okay, sir. Thank
Understood? Okay. So the final is IRR. So IRR function calculates the internal rate of return for series of cash flow. So it will be calculated the IRR functions to find out the series of cash flow. So my cash flow I have here. I will find out the ratio. So the ratio of my company. So what is the best ratio? If there is a 10 years, it should be 20 percentage above. So ratio, if I wanted to take the means that is the return percentage of the cash flow if I do the IRR. So what you need to do is this like IRR directly values. Values is nothing but your cash flow, total cash flow from series from first 0 year to fifth year you take. Then close the bracket and enter. So it should be 32 or 33 percentage. So where you can analyze your business. So whether I can take this Apollo, means the drug model, can take a franchisee or not, I can analyze it by seeing this. Okay. Excuse me
Sir,
for
here
5 minutes.
question, sir.
Sorry.
Sir, in question they have told like they have estimated for 20%, but we are getting 32%, no, sir?
They estimated.
Return.
Return they estimated is 20%, but more than 20% they are getting no. Then it is good.
So you can okay. They're like every case they will be having some expectation. So according
Yes,
to that,
yes,
above or below, we'll get to know.
yeah. So if that is above, then you can take a chance of taking franchisee of any business. If it is below than the expectation, then it is a risky to take that particular company.
Okay, sir. Thank you.
So now I can take this drug model. So it is giving me 32% return.
Sir, this
Hmm.
the formula, can you please show it, sir?
Equals IRR, open the bracket, select the value from cash flow, complete the data, only the cash flow, total cash flow, bracket close, enter. Okay. So to all these things, 5 minutes, excuse me, I'll restart it. Yeah, do it. Suprita, do you have a doubt still in the interest expenses? I have seen the message now. Okay, once again I'll explain. So they're telling to every the operating expenditures will be calculated on the annual sales 25%. So here equals total annual into 25%. As they told, every year there will be have a growth. No, they have not told any growth here. So for the annual sales, you just take the 25% every year. Interest expenses, sorry. Interest expenses is on debt amount. That is how much? 12%. Here, take the debt amount into 12%. So this debt amount will be remain same. So what I have did is like I have when I to drag the D27 made an absolute reference. So if I do the absolute, it will not change the reference when you drag the font. Okay, that's what. Now interest expenses will be calculated on debts. Debt into 12%. So if you are dragging, make this D27 as an absolute by pressing F4. Understood? Do everything. finished, everyone? Okay, okay. Finish it. If you want to go for IPO or to purchase a stock, I don't have any draft models, but I'll explain you. First, you should analyze the business company for IPO. So, what is IPO? So, initial public offering. See, when it comes to this IPO and stock or anything, first you need to know cash flow. Very much important, cash flow. Then financial line items, balance sheet, and income statement. So these are all the things that we need to do. In the cash flow, very much important, you need to understand whether how much cash they have in hand. So this is very much important. And so what we have found the IRR, ratio of a business. As I told you, for 5 years, for 10 years, you need to find out how much
Sir,
they
your
will
voice is
give the
breaking, sir.
returns. Now, even now it is breaking.
Yes, sir.
Now,
Now it is fine, sir.
okay, IRR is nothing but type IRR, select all the total cash flow, only the cash flow, bracket close, enter. This is IRR. Okay.
Sir, in this same, sir, I'm getting zero. It's why
Variable, the different you are getting. How much you are getting?
zero it is showing, sir.
Huh? How much it is showing?
Zero, sir.
Zero. There is no chances of showing zero. Do you have the exact value?
Sir, I pressed equal to IRR and all the cash flow I have selected, sir, and bracket close I have done. Same only I have done, sir. If I press enter, it is showing zero, sir. Value.
Zero. Zero it should not show. Are you getting, means in the cash flow, whatever the answer I have, the same answers you have?
Yes, sir.
Okay.
Same answers I have.
You just edit the formula, see the formula, exactly it is.
I'll see, sir. Wait. For me also it is showing D36 that into one I36.
Uh, then still you are getting zero.
Yes, sir. If I put it,
You take.
if I press
Uh,
press enter, sir, I'll get zero.
okay. You just take a snap of that and you send me the WhatsApp group. Let me check.
Okay, okay. This I'm using 2009, 2007,
No
sir.
worries.
Like,
No worries. IRR, the function is coming. No IRR function.
ARR function it is coming, sir. It's same, sir.
If that IRR is coming, then it is working. Okay.
Okay, sir. I'll send, sir. Thank you. Sir, I sent in WhatsApp, sir.
Yeah. In this, you check whether this is in the percentage. Select that cell. In the number, it is in general or percentage.
Okay, sir, I'll check.
See, if it is general, maybe you will get 0. Means that decimal should be there, it's not representing. Make it as the percentage. It will fit.
Okay, sir, I'll check. Sir, it is in general, sir.
You may change it to percentage.
Now I'll try, sir.
You are getting?
No, sir, again I'm getting 0 also.
Select that cell, the D38 or whatever the answer where you got. Select that cell. Then you give percentage here. Percentage in the sense, don't give this percentage here. In the number format, change the general into percentage.
Okay, sir. By selecting cell, I have to.
Select that cell. Let that cell be selected, then you do it.
So now I got question.
Oh,
It was zero only, sir. Then I selected the cell and I selected percentage, sir. I got 32%. Exactly.
okay.
Thank you, sir.
So this much you should practice. Everything you practice. So that in the small part I'll explain it. See, IPO, you need to find it out your companies, so whichever the company is offering this IPO, that you need to find out 5 years past. Usually when it comes to the stock market or IPO things and all, it should be find out with the previous years, not the present years. So or the future year. So you need to find out the previous years, 5 years back, how much the cash in hand they had, what they have now, and within the 5 years or within the 10 years, which was the last dropout for like how much amount was a dropout amount, why, the reason you should find out. And if there is a sudden friction they have, sudden raise if they have, that raise is a risky raise, so you need to analyze that rise. If that rise has a point 0.5 or 0.1%, then there is a chance of the business to come up. So now see this Paytm has left the IPO and the stocks. Paytm, if I in the past, in the beginning it showed good. In the later it has become dull. Now still they have the investors, but still in the future it is very difficult to predict whether you want to go further or not. So Adani Gautam's oil things and all, a month to 2 months back it was good. Now he is waiting for some good time to initiate his IPO. So this Reliance again. So Reliance also we can't hope what would be next, because now as they increase the price of everything, they may lose the customers also. That time their cash flow will come down. So if the cash flow is coming down, the ratio will also drop it. So the investors or the IPO formats, like whatever the stock you are going to purchase, it would be like a risk itself. But with they are all like a raised stock markets. They don't try to, though they don't risk their markets to come down. They'll keep it tight. So you need to see the last 5 years or 10 years and the beginning. So on that base you can analyze that and you can purchase the IPO. So IPO you need to, IPO you don't want to worry if it has been, you are allotted. If you are chosen a wrong, then there is a loss. It's very difficult to get the allotment, but for a long time if you are going, it is good for the stock. Okay, understood.
Understood, sir.
Okay.
Sir, CAPM model is totally different, sir.
Uh-huh.
CAPM models are capital price asset. So, like
Yeah, they
purchasing.
are. CAPM models are like different. I don't have much knowledge about that actually, so I should go through with that.
Okay,
CAPM, I'll see. I'll go through with that until the class completes. Whatever the knowledge I get, I'll share
okay,
on
okay,
that.
sir. But in this syllabus, financial modeling, it is not there.
No, no.
Okay.
Actually, when it comes to the financial model, we can make it out. See, based on the past 5 years or anything, we
Value.
can do it out. But financial model is mainly meant to find it out the future values.
Okay, okay.
So the business. So if you are being an analyst for a company, you need to analyze their company growth.
Like
So there and
equity.
all like yeah. So that financial model has a difference. Yeah, you can also take this part, stock and IPO things and all you can take it. into
But it majorly concentrates financial modeling on the businesses,
yes,
more on
business.
the business. Okay, like
Yes.
example, you showed us Apollo, whether to go
Huh.
for this project or not, like that.
Yes. Correct. Uh, okay.
Okay. Thank you.
Thank you then. So tomorrow and Monday will be our last class. Tomorrow I will finish. Toyota I have sent you, correct? Try to figure it out to that, everyone.
Sir.
So try to figure it out to the Toyota case study you do have, that module you try to do. We will solve tomorrow. Monday, everything like a revision, everything from the beginning we do revisions, practice everything. And the question papers and all, I'll try to get some of the model question papers. So if I get, I will solve. I will make it to solve those things. Tuesday will be your exams.
But can
Okay.
it be on Wednesday, sir? One day we'll get for study.
That you need to talk with the organization. It
Oh,
is fixed. Means like it is planned for the 30 hours. Last 2 hours is an exam. It is planned.
okay.
You talk with the organization, your HOD or whoever the madam or sir.
Hmm.
So if they
Okay,
say, if I get any updates from them on that base, we will do it.
okay, sir. We'll ask.
Okay.
So then tomorrow
Fine then.
will be the
Uh,
last class, sir.
yes, yes. Tomorrow will be the
Then
last class.
Monday, sir.
Monday we do some revisions.
Okay, sir. So please share us the links
Link. Sure, sure.
from actually last sixth link was shared, sir. Then from seventh links are not shared yet, sir.
But
Okay,
in
fine.
YouTube
I
it is
will.
This is not
updated.
there.
YouTube it is updated, sir. If you subscribe, it will come on.
Yes, yes. If you subscribe, you will get.
Sir,
From sixth
share
day
the
till
answers.
sixth, it has been done. Sorry.
Share the answers from TVM sir, from that team till
Okay.
now.
Yeah, yeah. Sure, sure. I'll share.
Thank you.
TVM and all I have shared, no, already.
No,
Balance sheet.
that yes, sir.
Uh, So this, anyhow, we did the drug model. Toyota also we will do it.
Hmm.
That's it. So balance sheet third you want, but third balance sheet I'll try to solve it and send you to them.
Okay, okay. Thank you.
Yeah. Thank you all.
Okay,
Hope
sir.
you're all
Thank you,
understanding.
sir.
Thank you.
Thank you, sir.